Hey, welcome back to The Dive. Today on the show, we have the founder of Junior Miner Junkie, David Erfle. David's joining us today to discuss inflation, the debt ceiling, the end of the petrodollar, precious metals, and be sure to stay tuned to the end to hear the names that David's liking right now. Hey, David, thank you for joining us. Welcome back to The Dive.
Hey, Cassandra, how you doing? Nice to see you again.
I'm good. Thank you so much for asking. Okay, so let's start off with what's happening with the Fed and inflation. The bond market clearly thinks that rates will be going down over the course of the next 5 years. Inflation will ultimately tell the tale. Where do you think inflation is heading over the medium term, say 2 to 5 years?
Well, that's quite a ways out, but although inflation is peaked, I still see it remaining very high, and the bond market is signaling that the Fed is going to Fed is going to stop raising rates here pretty soon. If you take a look at the yields, the yields are coming down, and they're basically telling the market that hey, the Fed's gonna probably stop around 5%. That would be another quarter point today, and then maybe another quarter point after that. So, but I still see the inflation rate remaining pretty high, even though it's peaked.
How are you positioning yourself given the current market?
Well, fortunately for myself and my subscribers, I completed all my junior positions late last year. I was buying into the weakness. It's the end of the year. The basically the capitulation phase in the junior sector started in June, and then it didn't end until brutal tax loss selling took over, and you had ridiculously low values for a lot of these quality companies. So I continued to accumulate into that weakness. And luckily for myself and my subscribers, we've done pretty well going into the new year.
Okay, now let's talk about the debt ceiling for a minute. Do you think that the debt ceiling debate matters? Are there any things that investors should be watching out for?
Absolutely, it matters. I mean, they have the U.S. government continues to have to has to continue raising it. And now you've got Republicans in the House, and there's going to be a lot of wrangling going on. This issue might not be resolved until after the summer, possibly even until September. So that's going to make the market pretty jittery about the debt situation, which is basically the elephant in the room. I mean, there's over 31 trillion in U.S. debt now, but globally there's over 300 trillion in debt, which obviously none of these governments any have have any way to pay back, nor are they even attempting to pay it back. So it's basically the gold price is basically a canary in the coal mine, saying, "Hey, this monetary system can't continue. We can't continue to kick the can down the road. The road is ending here." And the gold price is clearly a warning sign, telling everybody that it's basically a big red flag over Wall Street. Whenever you have the debt ceiling and the debt come into view. I mean, it's not really talked about all that much until something like the debt ceiling comes up. Then all of a sudden it's like, hey, we've got a lot of debt here, and nobody has any intention of ever paying any of it back.
Bloomberg reported that the Saudis are open to discussions on oil transactions in currencies other than the US dollar. Do you think that we're seeing the end of the petrodollar? What would it mean?
Well, basically, what we're seeing is the end of the dollar as the world's reserve currency. Slowly, it's happening. I mean, it happens about every 80 years, right? The country loses the status of the world's reserve currency. The U.S. dollar has been the world's reserve currency since Bretton Woods back in after World War II, and we're starting to lose that. All these countries are starting to pay for oil in yuan. Ghana is paying for oil in gold. Paying for it in euros. It's happening in other parts of the world. So, I mean, that's been the number one reason why the U.S. dollar has been the world's reserve currency, because you had to transfer your currency into dollars to buy oil. That's no longer the case in a lot of these countries. That is huge. Absolutely.
How do you think the miners are performing relative to the price of gold?
Well, they're performing a lot better than they were into the end of last year. I mean, when you had the capitulation phase begin in the middle of last year, all values were thrown out the window. Most everybody was just, get me out of this sector at any price, and it created an incredible opportunity. But a lot of these juniors are still trading well below where they should be as far as the price of gold is concerned. Many of them are still trading as if the gold price is below $1,400. The last time they were trading at these levels, the price was below $1,400. And basically what you're seeing now is the capital markets in the junior sector have also really picked up. You see a lot of bought deals recently. I've seen a lot of really large private placements without warrants in earlier stage companies. That's huge. That's basically telling the sector that, hey, capital markets are now friendly. They understand that the gold price is going up. They understand that the gold price probably won't go below $1,800 again. So that has opened up these capital markets, and they're saying, hey, we want to be invested in your company. We believe in your asset. We don't even need a warrant to invest in your company, and that's huge.
We read in one of your most recent publications that junior stocks will outperform in 2023. Could you walk us through this?
Oh, sure. I mean, basically, every 7 years, gold stocks make a major bottom. I've discussed this with you on your show before. In 2001, we had a double bottom at gold at 250. Then the gold stocks ran up, and they had another major bottom in 2008 during the global financial crisis. They ran up quite a bit. From 2008 to 2011, when you had the gold price go from less than $700 to 1925. I mean, that was huge. I mean, you had major wins for a lot of these juniors, and then a major bottom happened 7 years later in late 2015. We had a huge move up, but it only lasted for 6 months. And then that move consolidated for a couple of years. Then we had another major move up. Then that move consolidated again. And now we've had another major bottom here in September of 2022. And so we've already had the GDX, the GDXJ go up over 50%. So they're due for a correction here, absolutely. But as far as a bear market rally is concerned, it's not a bear market rally. This is now a bull market that began, I believe, ended of 2022.
The People's Bank of China purchased 32 tons of gold in November and another 30 tons in December. These are the first purchases by the Chinese central bank since 2019 that we know of. How much gold do you think China actually owns? Do you think that they could own significantly more than what they report?
I have no idea how much they own, but I can tell you it's a lot more than they've declared that they own. And yes, that's the first time in a few years that they've announced that they're buying gold. So they always announce that they're buying gold a long time after they've actually bought it. They're the number one consumer of gold, producer of gold in the world also. And you also have Russia buying a lot of gold. So I think this is the most gold central banks have bought in over 50 years. They're continuing to buy gold. And that's what you want to. That's what you want to see. You want to see these central banks. You follow what they do, not what they say. And if they're buying a lot of this gold, then they must be worried about something. And I think it's the uncertainty is the big reason why the gold price is going to continue to go higher. There's uncertainty about war, about how this war is going to escalate. In Ukraine and Russia, it might go into Europe. The USA might get even more involved in China going into Taiwan. And you've got all this uncertainty in geopolitically. You've got all this uncertainty financially about what's happening with the financial macro situation, the debt problem, and gold thrives in uncertainty. And also you've got basically the fact that everybody's forgotten about gold. I mean, it hasn't been a headline grabber for quite a long time. It's an afterthought. We had everybody saying that cryptocurrency was the new gold. You got to buy cryptos. That's the new safe haven. That blew up in everybody's face. So all these previous headwinds for the gold price are now tailwinds. And I see that continuing in 2020.
So we know that you don't have a crystal ball, but what is your gold price outlook for 2023?
Oh, well, I can tell you this. I see the $2,100 floor, ceiling, that has been $2,000, but it has been a ceiling for over a decade. This is huge. And if you take a look at the long-term gold chart, cup and handle pattern is now back into play. You've had a huge cup made, for a decade-long cup from the first high of 1925 and 2011 to the next high of 2090 back in August of 2020. That's the cup. And the handle that started in August of 2020 is now trying to complete by making a monthly close above $2,000. Yet to see a monthly close above $2,000. It came really close in 2020. I hear the month is going to end here in about an hour. Gold is trying to make a monthly close above 1950 in gold futures. I don't think it's going to make it, but $2,000, that's the major level. And once that $2,100 level that's been the ceiling for over a decade, once that becomes a floor, that's when the gold price is really going to take off. You could compare it to this happening at the $1,000 gold price back in 2008. Right, the gold price ran up to $1,000. It got really overbought when it did, and it failed there. And it failed there 3 times in about a year. And once it finally got over $1,000, that's when it took off, and it went up. It almost went straight up to over 1,900 in a couple of years. I see that possibility happening once the $2,000 floor is finally this $2,000 ceiling is finally a floor.
So David, our viewers love when you name names. Would you mind sharing the names that you like right now? Is there anything that you would like to highlight?
Oh, sure. Vizsla Silver, I think I've discussed this publicly before. I went and saw the project recently. This is a company that they just announced they now have over 200 million ounces of high-grade silver in a very friendly jurisdiction in Mexico that's only an hour away from Mazatlan, a deep-sea port. In Mazatlan, they tied up this huge land package. And then right after they announced this major updated resource, they announced a $34 million finance that was immediately upsized to $39 million without a warrant. And this is a company that has not even reached the PEA stage yet. They're going to announce another mineral resource update after they've drilled another 90,000 meters in 2023. So that's huge. Their share structure is still pretty tight, with just about 240 million fully diluted shares out, and now they're going to have $60 million when this placement closes. So this is what I'm talking about. When you have a company like this that has not even reached the PEA stage, that can raise this amount of money without having to entice capital markets with a warrant. This is very good news.
Okay, so David, before we let you go here, where can our viewers go to find more of your commentary?
Well, every Friday, I have a weekly column that comes out on Kitco, comes out in the morning, and my website is juniorminerjunkie.com.
Awesome. Well, thank you so much for taking the time to come on and chat with us and our audience today. We really appreciate it, David.
Absolutely. Thanks again for having me on.
Thank you so much for tuning in today. We will be back again tomorrow. So if you want to learn some more, be sure to stay tuned by hitting that notification bell and subscribing below before you leave us. Bye.